Good morning. Thank you so much for joining us for our first Business First Wednesday of the 2022-23 season. We are super excited to have Andrea Colleen here from Consumer Credit Counseling Service of Rochester. And first, I just want to tell a little bit about what we do here at the Business Insight Center. So I'm Jennifer Burns. I'm the head of the Business Insight Center here at the Central Library. Whatever market research you may need, including potential competitors, potential customers, if you need an example of business plans, if you need some software to help you write a business plan, and industry surveys, we offer all of those at no cost to you, and everything is confidential. So we're going to put in the chat like how to reach out to us and request an appointment, because we are appointment only. So we're a little different than other library divisions because we're a very small team. So we encourage you to not just show up because we may not be here. So we'll put that in the chat in the near future. But now I'm going to hand it over to Gina Mangiamelli from the Small Business Development Center.
Thanks, Jennifer, and good morning, everyone. Thank you again for joining us. I think you're going to find this to be a very pertinent and wonderful program and some insights related to your personal and business credit. The Small Business Development Center really takes a look at this topic when people come to visit us, because many times they're in startup or expansion and they may need some bank financing. And the first question we have to ask is, how's your credit? And so this is a really pertinent topic if anyone is planning on business, growing a business and developing a business. So maybe you've heard of the SBDC, maybe you haven't. The Small Business Development Center actually began in New York State in 1984. The SUNY Brockport SBDC, which is where we are in Rochester, we're in Rochester, New York. We are one of 22 centers statewide, but one of 1,157 nationwide. So we're a very large program. We are taxpayer supported through the SBA and the state. So that's why our services are also at no cost to you. So you'd never get a bill. And we help with business plan development. In other words, if you write a plan, you can bring it to us. We will critique it, help with correcting language, grammar, things of that sort, help provide direction on what the audience that you're speaking to through that business plan needs to hear, typically an underwriter or an investor. We also work with startups, yes, but we also do existing businesses for business sale, business expansion, things of that type, and loan assistance. So you come to the SBDC, you write a business plan with the purpose of getting a loan so you can start or expand a business. And then we're going to help you with those elements, the loan packaging process. We help with organizational structures and help walk you through whether you want to be a sole proprietor, a limited liability company, a C corporation, subchapter S, or limited liability company. And so we work on organizational structure. We provide workshops and seminars like this one in conjunction with the library. We work with construction contractors, procurement, and we also have two resources for strategic marketing information. We have our research network in Albany, which is staffed with professional resource marketing librarians. And then we also have a national perspective where down in San Antonio, Texas, they have more additional resources. So there's no reason not to find your sample business plan or the demographics you need, or, the industry marketing information between the Central Library, the SBDC resources, and even our national resources. We have a lot to offer in terms of helping you step through any business goal that you may have. The SBDC was located near the baseball stadium prior to June 3rd. On June 3rd, we came to the Rochester Educational Opportunity Center. We're located within downtown Brockport now on the 5th floor. It's 161 Chestnut Street between Court and Woodbury. And if you'd like to make an appointment, all you have to do is go to our statewide website, which I'll put in the chat, www.nysbdc.org. And you just click on make an appointment, fill out the registration. It'll come to, based on your zip code, it will come to our office, and then we'll assign it to an advisor, and the advisor will then reach out to you to set up that first initial appointment. No, actually, no, not downtown Rochester, Dorothy. We're actually considered a part of what's called downtown Brockport. It's an extension of the campus. So we're considered the 5th floor downtown Brockport. So let me just clarify that for you. So with that said, let's turn it over to our presenter today, Andrea, and learn about personal and business credit. Thank you.
Wonderful. Well, thank you so much, everybody. Good morning. Good morning. First day of school. It's a busy day for a lot of people, I'm sure. My name is Andrea Colleen, and I work at Consumer Credit Counseling Service here in Rochester, New York. And we're very, very happy to partner, and as always, with both the SBDC and the Central Library Business Insight to be able to offer our presentation to you today. So this is going to be part 1 of a 3-part series that's going to be offered for the next 2 months after this. And the whole series is really going to be based on like managing our personal finances, but there could be some things that we look at differently, or maybe things we should think about as a business owner when it comes to managing our personal expenses. So that's what we're going to talk about today, is just our personal credit with a twist for business owners. So we'll talk a bit about that. And then if people do need to get connected at our agency at Consumer Credit, I'll tell you a little about who we are and what we do. But one of our services that we now offer is financial counseling for business owners. So it doesn't, it's not going to talk about business entities or anything like that. That's something that you'd want to, work with the SBDC and the library for. But if you're looking to maybe clean up some of your own debt, your finances, maybe just looking for some advice or information as to best ways to manage your own personal expenses, it could be a fantastic complement to everything else that you're doing. And that is a completely free service that we're very proud to be able to offer to our community. And we're also offering these educational sessions. So I hope this is helpful to you and hopefully some good topics. So what we're going to touch on today is we'll talk a bit about credit reports, credit management. And usually at the end of each section, I do like to take time to see if there's questions or whatnot, but it looks like we got about 30 people on the call. So what I may do is I may stop once halfway through, and then once again at the end, I will try to do my very best to check the chat to see if there's any questions I can answer there.
Andrea, I monitor the chat and I'll let you know if there's questions.
Thank you. All right, perfect. So we'll kind of move our way from there. So a little bit about our agency. We've been here in Rochester for about 52 years, and we just want to say thank you so much for attending today. Our focus as an agency is on the financial health of individuals and families, helping those that we serve to achieve financial wellness through the programs and services that we offer. Consumer Credit Counseling Service is a member of the National Foundation for Credit Counseling. We're also licensed by the New York State Department of Financial Services, as well as a HUD-approved housing counseling agency. And we are a member of the Better Business Bureau with an A+ rating. Here's my contact information if you have questions. I'll also place my email in the chat at the end of the session. So here's the different things that we're going to touch on today. Personal credit and business, understanding personal credit, building the personal credit, understanding your credit score, and then just a few business credit basics, as well as our services if people do need to get connected. So we'll start with personal credit and business. So I know everybody's probably at different stages and ages. Some of us may be business owners. Some of us may be looking to either start a business or thinking about starting a business. So I want to try to keep this open for everyone. So when it comes to credit for lending, in the future, a lot of commercial lenders in the very first few years, especially if we have no history, are going to look at our own personal credit when it comes to lending criteria in the future. So it's important to make sure that our credit personally on all levels, but especially for us business owners, is where it needs to be, and that we're aware of the debt we have, we're aware of about where our score falls, all that good stuff. Poor personal credit can affect your approval for a commercial loan, believe it or not. So there's lots of different criteria that they look at. And as you build your business, they may not look at the personal side of things, but for the first few years, they definitely will. So we'll talk a little bit more about that. When it comes to traditional lending, and when I say lending, I typically meaning banks and credit unions, they usually look for a minimum score of at least 640 or more. And for businesses that have been operating for less than a year, your personal credit score will be the only really thing considered. I mean, they may be other things considered, but when it comes to the credit aspect of things, that's really what they're going to look at. Your credit score ranges between 300 to 850, depending on the type. And I'll talk more about that in a few slides, but let's say 640 and up. The higher, the better. When it comes to managing our own credit, the important factors are because we're always told to make sure we're meeting our obligations to have that good credit. But some of the impacts of that are obtaining a credit card or a loan. So on the personal side of things, maybe it's a mortgage, maybe it's a car loan, maybe it's refinancing, so when we have that good credit, we're managing it appropriately, which we'll talk about how to do that. It can give us more opportunity. It can help us save money on lower interest rates, all of that good stuff. Some apartment complexes look at credit too, believe it or not. I mean, they're going to look at other things as far as income history and all of that, but a lot of them may look at our credit report, not necessarily for lending. They're not going to give us money or lend us money, I should say, but they will look at it to determine, accountability, to see if there's been any previous evictions, things of that nature, or judgments or debts. Insurances, says car insurance, but I should change that to say all insurances. Many insurances will look at our credit history. Some might weigh more on it than others. It really just depends on what other criteria is considered. But in many cases, insurance credit is part of getting approved for insurance, depending on our rates that we're receiving. Some employers will check your credit. If you work for any type of municipality, meaning a town, city, government, that's almost always the case, that a personal credit report is pulled with our permission as part of the official hiring process. Many banks and credit unions or financial institutions also will do the same, like where I work, that's part of the background check. And then some employers will too. No one can pull your credit report without your written authorization. I will put that out there. And they may not be as much looking at score, just more data. If you're going to work for the federal government or you're going to work at the IRS, but we're delinquent on taxes, or we have delinquent federal loans, state debts, things like that, sometimes that could become a conflict. So that's part of the process. It also helps self-employed individuals obtain more opportunity for business lending in the future. So the better we manage our own credit report, our own debt, the more opportunity that could be given. So it's not as easy as we're making it sound. We're going to go over more details of how to do that and some tips and tricks and all that good stuff. One thing that we know too is that a lot of just by working at CCCS, even though we've officially started the financial counseling for business owners, we've financially counseled business owners the whole time. And especially since, the pandemic started, which I hate that word now, but when the pandemic started, we've seen a lot of business owners tap into their personal credit, whether it be home equity loans, whether it be second mortgages, whether they're not submitting money for retirement or saving for retirement, I should say, and that will be covered more in some of the other sessions. But that is something that, we've seen. So it's, again, something to kind of think about and to be aware of is the ways that we're managing our own personal credit. Not to mention, it can just help reduce our stress levels and think more clearly when it comes to making not only personal financial decisions, but financial decisions for our business.
Hey,
So
Andrea, we have a question. Do student loans get checked in a credit check?
Student loans will appear on a credit report, yes. And it's not so much the balance on a student loan that would impact the score as much. It's just the status, if it's delinquent or not. As long as that student loan is current, and if it's currently in a forbearance, which it will be until the end of the year, if you're choosing to go that, everybody's federal student loans are falling within that. Student loans are part of that process, but you're not going to get denied. The biggest thing about the credit score is just making sure those payments are consistent, which hopefully they should be at this point. considering they're in forbearance. But yes, they are part of the process. Any other ones, Jennifer?
Nope.
So before anyone lends us money, they want to know a few things about us. The four main things: we have character, capacity, capital, and collateral. So the things that lenders really look at is how much money we're making, how much money we can take, depending on what I mean by take is like what other kind of debt we have out there, the way that we manage our debt. So the word character is the word that's used in the lending industry to determine how well we make our payments and we manage our debts. The word capacity is how much money we have. So it's not just how much money we make, it's how much money we have and we have available to pay the loan that we're trying to obtain. So if we have a lot of different creditor debts or a lot of loans we're paying out, you can have a great credit score, but if a lot of your money's being consumed, sometimes people can get denied loans based on that. Capital, we know capital. That's business. You're the business owners online. Capital is cash. So part of getting a loan might be a down payment. Part of getting a loan might be having some reserves set aside. So that all really just depends on the type of loan, but capital is part of the process as well. The other part is collateral. What is it that we're trying to obtain? Is it worth the value that we're trying to purchase it for? We see that a lot with cars. We see that a lot with mortgages and houses, and in some cases, businesses as well. So there's more than just our credit score that goes into getting approved for a loan. There's our income, how much other debt we're paying out, what we have saved, what we're trying to get, and of course, how we manage it. So I just wanted to kind of introduce that as one of our concepts. In order to kind of see where we stand, if we haven't done this for the past year or two, we'll put that out there, I would definitely recommend pulling a credit report. If you're not aware, and I think most people might be, but let's just, depending on where we are, you can get a free credit report once a year from each credit report agency. There's 3 credit reporting agencies nationally: Equifax, Experian, and TransUnion. So there's 3 separate companies that create our credit reports. They look different, but they do have the same basic elements, which I'll go over in just a moment. But it's not a bad idea if we haven't seen our report for a while to make sure that we look at all 3, to make sure that they're looking balanced out and that things are where they need to be. Sometimes you can have an error on one and not on the other 2, and it's good to get a good view of that. If you're consistently pulling your reports, I would say pull one every quarter, every 3 to 4 months. You could get in that consistent routine just to kind of make sure that things are where they need to be. There's no fraudulent activity. It also really makes us aware of the debt that we have and where we stand with our balances and our consistent or non-consistent payment history, beyond just any fraudulent activity. So it's a really good habit to get into, especially if we're going to be owning a business and managing a business or currently do. A lot of times these things can get pushed to the side and forgotten, but I would put it on our calendar to make sure we're checking this out. You can look at your free report at annualcreditreport.com. That's no cost. There's not a score with it. This is data only. You can get a score. To get like your FICO score, which I'm going to elaborate on in a few moments, I promise. You could go to myfico.com. A lot of people will use some of the apps on your phone to kind of gauge what your score is. It is a different system. It's not the same thing that the banks are looking at. And I have a slide that will explain that a little bit deeper. So I promise I'll talk about that. But this is not necessarily a score tool. This is more data tool. And trust me, we get pulled into score. But the data on the report is really important. It's important for us to know. It's important for us not only to see like who's on there, who we owe money to, but even in the inquiry section to see who's pulling our credit report. Is there things that I'm not familiar with? Because there's different purposes of why someone would look at that. Mostly it should just be us, you looking at your reports to see that history. Anytime you apply for a loan or things like that, there might be a few promotional type marketing that will kind of gauge your score. But if you're seeing other places that you're not authorizing to pull your report through the inquiry section, it might be time to get maybe dispute that or whatnot. And I'll elaborate on that too.
Andrea, there's a question from Dorothy, going back to the overall credit score. Is credit available a factor?
Yes. Yes. And that will be in the next few slides. I'll explain that. But the more credit we have available, the higher your credit score tends to be. It's a great question. Is there another one? I thought I saw a couple.
Yeah. Please define the difference between the FICO score and a Vantage score.
Oh, I will. I promise.
Okay.
That's coming up.
It's coming
the
up.
slide will illustrate it a little bit easier. Anything else, Jen?
Nope, that's it.
All right. Okay. So here is the slide. Not the slide, I'm sorry. Here's annual credit report. This is just a screenshot of what the site looks like. So you just simply go to request your free report, and then you're going to do it again. You'll fill out an application. It will bring you to this slide. You can do 1, 2, 3. You could do one report, whatever you want. And then before it brings you to the actual credit report, it's going to ask you a few questions to confirm your identity. Sometimes it can ask a question. There's been a few times where I went to pull it and I couldn't answer the question. I actually had to go outside because it asked me for like the last few digits of my license plate. And I said, I don't know. I think that only happened once or twice, but usually I think I might have even backed out of that because I felt like it was kind of odd, but usually it's going to ask questions about data that's on your credit report so it can confirm your identity. If you're not able to answer those questions appropriately, it will not give you access to that online credit report. You can still get it for free. You just have to either call and order it or fill out a form and mail away for it. So that's just something to be aware of. So this is an actual Experian credit report. It's a very old one, but believe it or not, it looks so similar. And when we're pulling them online, you can either print them out, have a lot of paper. I don't know if you're gonna want to do that at a public place. I would not do it at a public place, or save it to your desktop or on a file or wherever you're comfortable with, so you can have access to it. It's a ton of pages. They're all a ton of pages because there's a lot of addendums and information and things like that. But usually the first few pages is where the information is. And just to review it, I won't go into huge detail here, but the sections of our credit report are basically personal and identifying information. It's going to have our name. It will never have your whole social on it. Might just have a few digits. I don't even know if it's the last 4 or the first few. Your birth date may have an employer on there, depending. So that's like our identifying information. Usually the second section of our credit report, it's always on there, but it's usually right on the front page, is like a summary, or it's called, it's leaving me right now. It's like a summary of our information, public records, right? So this would be, the summary will define what type of debt we have. If it says under revolving, that means it's like credit card debt. It might indicate like mortgage loans, car loans, installment loans, things like that, which would be kind of all added up in one section. But if there's judgments here, so a judgment is basically if someone sued you for a debt that was unpaid, or something, sometimes we see things like with New York State debt, like the one that always pops into mind is like delinquent child support, delinquent taxes, or just delinquent debt, period. If a judgment is filed, because they don't always do that, it would be in this section as well. So that's something, sometimes it's really easy to miss that. So you want to look there to make sure there's no judgments. Also, if there hasn't been any bankruptcies that have been filed, typically within the past 10 years, it will appear there as well. And then the rest of the big part of our credit report is basically the credit information, who we've borrowed from, who we've paid, who we haven't paid, who we're currently paying. They're updated every 30 days, depending on the creditor schedule. So if you miss a payment by a day or two for a debt, it usually won't appear on your credit report unless it's 30 days behind. But it's still, something we want to keep an eye on, because once it starts missing payments, once we get delinquencies in our credit report, that can really impact us, which I'll talk about. So the borrowing information, and then the last section is the inquiry information. That's who's been pulling your credit report, whether it be yourself, whether you've applied for a loan, whether it's promotional. And I'm making it sound complicated, but once you look at it, it's pretty easy to read and kind of follow through with that. So this is the report. If something's inaccurate on a credit report, by the way, you do have the absolute right to dispute it. It's not even hard. It used to be, I don't know if anybody has done this years ago, but like even when I started working at Consumer Credit, it was really a challenge to dispute an item, but now it's really done online and mostly they're resolved within a few days. So that's why it's good to look and see if there's anything that's inaccurate, to kind of keep an eye on it, because if we can catch it before we're trying to apply for a loan or do something big, it's so much easier to manage that. All right, so let's talk a little bit about building our personal credit. So once we have that report, and again, I know everyone's different stages and ages, so again, I'm trying to just review everything in full detail here, but once we view that report, it's important to take the steps to work on clearing up any collection issues or judgments. So judgment and collection are two different things. A collection means it's delinquent by more than 30 days. It usually takes, and there's no right or wrong here, but if a debt starts to go delinquent by like 90 days to 120 days, that may get sold to a collection agency. It may not. I have a workshop that explains that in a deeper level. But again, that's what collection means, is a delinquent debt. And usually it gets reported after 30 days. It's considered collections, but once it starts hitting 90 to 120 days, that's when they might start using collection agencies to collect that debt, depending. The judgment is just what I explained before. That's more of the legal status of debts. Usually when it comes to debt, it's called a default judgment, meaning we signed something somewhere saying we were going to pay. So it's kind of cut and dry, when it comes to that type of thing. But it doesn't mean they can't be resolved. I mean, that's what we do for a living. So, if there's debts that are collections, okay, what is it and how do I get it current, right? So we can work with the creditors to establish repayments. Sometimes people can make arrangements to repay those creditors. And I will tell you this, if anyone on this call is facing this, if you're, getting collection notices, or the credit is, you're fearing an old delinquent debt, please reach out to us. I'll put the link in. So we can always reach out, electronically and have someone contact you, or whatever works best. But I think it would be a great idea to make sure that we are on track for that. So building personal credit. So look at that report, see what has to get resolved. This is just a quick overview of like how long things stay there. So when we're looking at our own personal credit report, 7 years for late payments, collections, judgments, Chapter 13 bankruptcies, 10 years for Chapter 7 bankruptcy. Just as a quick note, the main difference between a Chapter 7 and a 13 is where a portion of your debt is repaid depending on your income situation, your asset level. There's a lot more to it than I'm describing. A Chapter 7 bankruptcy is when all of your debts are included in an initial bankruptcy, and it's not repaid. But those are the main differences, but they're still both bankruptcies. It's both still a federal overview, and they're both still reported to our credit reports. Inquiries will appear on a credit report for up to a 2-year period. So when I say inquiry, I know I mentioned it, but I'll just specify. Anytime someone requests, including ourselves, to look at your credit report or your credit profile, it will appear as an inquiry, right? So they will appear there for 2 years. The kind of inquiries that don't impact credit is if we're looking at our own report. If an employer pulls your report, it will not hurt your credit report. It only really, and when I say hurt your credit report, I'm sorry, it won't impact your credit score. The only kind that really do impact the credit score is when you're applying for credit. And I'll explain that, I promise. The slides coming up of how that can impact you. I see a few chats, but I'm just gonna.
Yeah, let's just, quick questions. Overdrawn accounts will go into check systems. Does a check system account get reported to the credit reporting agencies?
That is a fantastic question. Not usually. I think I've seen it in the past 25 years of working at CCCS. I think I've seen overdrawn checking accounts on credit reports between 3 to 5 times. So it could if they're really, depending on their collection strategy, but I don't see it very often. It's more in a check systems, which is a little different, which is a lot really different than a credit report. But that's a great question. Perfect. Another one.
Nope, that's it.
So good, good, good. So I see that. And then my last little line here is no limit for unpaid student loans. I should just say student loans. They kind of just, they're like a federal debt. So even once they are paid, they will just kind of stick around on a credit report. It doesn't hurt it though. If they're unpaid, it hurts your report. Yes, no good. But if they are paid, it's fine. And they kind of just stay around. Child support only gets reported if the debt goes into a serious delinquency. And that will stay there, as well as taxes. When you owe taxes to the state or the government, those are typically reported. But again, I've seen them plenty of times on credit reports, but someone really has to be pretty far delinquent. If they're in like a repayment plan, I mean, I can't speak for their reporting strategies, but just from experience, like if someone's in some kind of repayment agreement or whatnot, prior to getting reported, I don't see a lot of that hit a credit report, but I would still pull it, right? So if you're fearing that, if that's a situation, because I know, and this is a different workshop and maybe something that I would need support in teaching, but I know that just doing some of these workshops, I've come across business owners who had some tax situations, and early on, again, not going to speak on that too much because it's not my topic, but I wanted just to pull that in because that was a fear that it was going to get reported to the credit.
Are you talking about federal taxes?
Yeah, I think it was federal for this person, federal. It may have been state, but I think it was federal.
Okay, but it's not real estate or income tax.
Oh, yeah. I'm sorry. Yeah, it wasn't taxes like that. It was income tax.
Okay.
Or the lack thereof. I don't know. So that's kind of how long things stay. People have a lot of questions on that. Any other questions? I keep seeing the chat box. I don't know.
Nope, that's it.
Thanks. So establishing credit, maybe we're here, maybe we're not, but I'm just going to review it. Establishing credit simply means borrowing money from an entity that reports to credit reporting agencies, most banks and credit unions. So to establish credit, we have to apply. A secured loan or a credit card, or secured credit card, I should even have on there. I'm sorry about that. But that will usually get reported to our credit report. A secured credit card's a really good way to start. And I say that because if someone's never used credit, sometimes you can't initially get approved for credit because you don't have any history. So a secured card or loan even means that you're putting your own money in a specific account, and then the financial institution that you're working with is lending you that same amount of money. So we would still manage it as a regular loan or a regular credit card. I feel like the credit card, I could be wrong because I don't have data proving this or anything, but I feel like a secured credit card tends to build the credit a little quicker versus a loan, but could be wrong, maybe a little bit of both, which I'll talk about in a few, but those are things that people can do if they've never used credit, or maybe there's some delinquencies that they're clearing up on their credit report, but they still want to show some sort of credit usage. Secured credit cards or loans, sometimes places will have like credit builder loans to help build that credit back up. Those are some great strategies to do that. Auto loan, car loan, again, as long as it's affordable for the person, that's definitely, and they can meet those payments on time. That's why I'm saying that, is to make sure we can make, help to grow that report. Lenders like to see at least 1 year of using credit. Some lenders, so this is not business lenders, I'm just talking basic. They like to see a good year of someone managing it responsibly, and it will tend to grow. A trade line means like a lending relationship between yourself and a banking institution. So a few different trade lines is helpful. Like 3 is a good start. So a trade line might be a credit card. Well, let's back it up. A trade line, a trade line is a credit card, or it is a car loan, or it is a mortgage, or even a student loan. Those are just lines of experience showing that those debts are being paid. That's all a trade line is. Sometimes it's nice to vary them up and have different types, which I'll elaborate on in just a few moments. But those are things that help us. And then, of course, on-time payments and low credit balances. This was in conjunction with the question that was asked earlier. Is available credit part of our credit score? Yes. So the lower our credit card balances in comparison to the limits that we have, you'll see, maybe you've experienced it, our credit score tends to increase. So those are a few credit tips on like establishing credit, managing it. We did talk about the errors on the report. So if there's any erroneous information that's out there, you want to make sure we take care of that, keeping an eye on it. They're not always accurate. I think I did speak on this earlier, so I apologize, but this is just a sample. We don't necessarily need to send a letter. Now, if we dispute it online, it's a text box that we get to explain why we're disputing it. Maybe we're disputing it because the debt simply isn't our debt. The balance is off, it's showing delinquent when it never fell delinquent. So this is just a real brief example of the text you can utilize.
Andrea, questions?
Mhm.
Using a cosigner, does that help or hurt, or it's neutral in?
I love that one. You guys have awesome questions. So yeah, I mean, if someone needs a cosigner to get approved for a loan, it will help that person to get approved for that loan. And as long as the debts are paid consistently, it will help both parties build their credit. But the thing about a cosigner, of course, I have to just elaborate on that. There's two sides to it. If you're the one co-signing, we need to ensure that if we're looking to utilize more debt, whether it's purchasing a home or a car, even if someone else is managing that debt, that payment will be part of their profile. So it's not necessarily going to reduce their credit score, but because it's a debt that's being paid out, it might reduce their borrowing capacity. So I hope I explained that
Yeah.
appropriately.
Okay, a couple more questions. These guys are on fire today.
I'm scared. No, I'm just kidding.
So
Go ahead.
do you
I'm
have
not
to,
scared.
can a business get a secured credit card if they've been in operation less than 6 months?
I don't know. That one, I don't.
Yeah, I would say you'd have to talk to your bank. It says I had a hard time to get approved through my business and had to use my own personal credit to get approved. Oh, that's because your business doesn't have a credit history yet. It's still too young.
Yeah.
And then please mention the percentage of credit use to credit line. If I have a credit card with a $5,000 limit, what is a good percentage of total credit?
30%.
30%.
Mhm. So again, I thought my slide was closer than it is, but it's coming, I swear. 30% of your credit. So if you use less than 30% of your available credit, so to demonstrate it simply, so my math skills are okay. If you have $1,000 line of credit or credit card, 30% of that is $300. You don't want your balance to be more than $300. You'll see, I mean, if it gets up there, we just got to work on paying it down as quick as we can and paying it on time. But you'll see that once you hit that 30%, and it's each individual creditor, right? It's not one big pool. It's each individual creditor I would suggest to work with. 30% of that is the goal. Great question. Anything else?
No, that's it.
I went over this, guys, already.
Oh,
I just
wait.
talked- go ahead.
Oh, sorry. Someone just added one. I've been in business a few years, but when I apply for credit, everyone still asks for my social security number. What should I do? You can get an EIN number for your business. Otherwise, Andrea, do you have any?
Yeah, I would think, I mean, if they're going to look at your personal credit, because we have an established business credit, and I think I want to make sure I just make myself clear. Please elaborate if anyone thinks, but if it's going to take a few years to build that business, and they're going to look at our personal credit. And when our personal credit comes into play, a social security number will always be utilized. But I don't know if you want to elaborate on the EIN. I see Gina, you popped up.
Yeah. So if I could elaborate on that just a little bit. Number one, it does depend on what type of an entity you are. If you have a DBA and you're a sole proprietorship, there's no differentiation or separation from your business life and your personal life. So in many cases, if you go to the bank and ask for a loan, they are going to look at personal credit because a sole proprietorship is the simplest form. You're just using an alias name for your business. So if you're a corporation, now corporations will typically have a DUNS number, Dun and Bradstreet number. They'll have an employer identification number, EIN number, and that separates them from their personal life. So the officers of the corporation are not handing out their social security number and their personal credit, unless we're talking a $10 million deal, then maybe. But for those of you who are new in business, I would recommend getting a Dun and Bradstreet number, because that can certainly help in terms of, because they will report payables, you know, who your vendors are, how you pay your vendors and so on. So keep in mind that as a business owner, the entity that you are will determine, you know, what kind of credit you'll apply for, what you can be approved for, but it also on the entity and just generally what the risk to the bank is. So if we're talking corporation with assets on the balance sheet, then they're not going to ask for your social security number. But I would recommend getting an EIN number through the Internal Revenue Service. Do not Google how do I get an EIN number, because you will get other companies that crop up and charge you $250. I had this happened to a client of mine. He Googled it because he thought that was the easiest way. They charge him $250 for something that is completely free. And I had to work about 3 weeks to get that money back to him. And to his credit, the website looked like a government site. The only difference was it was a .com instead of a .gov. So to get the EIN number, go to irs.gov, type in the search EIN, and you'll get all the publications, resources you need to get that. And there is no charge for it.
I just put into how to get a DUNS number if anyone isn't aware.
Great. Thank you.
Perfect. Thanks, everyone. Did we get any other questions? Some of it might be covered in the next section here, but.
I think I have a DUNS number and I have an EIN number. Maybe I'm applying for the wrong type of credit. So, and again, it might be the age of your business, but let's see if you address it in the further on, Andrea.
Yeah, it might not be, but let's go through these few slides and then we'll take a look, because it might kind of start to address it. So we talking credit score. We talked a little bit about your score. They help us. This is personal credit, right? This isn't the business side. This is our personal credit score. Can range anywhere between 300 to 850, right? And it's just supposed to help predict the likeliness of repayment in a fair way. The higher, the better. And they're compared by generating, they're generated by comparing consumer reports to a statistical model. So it's kind of a whole approach. And different creditors have different opinions. So whether it's a mortgage, an auto, credit card, business lending, right? They're going to look at different criteria. It's probably going to be somewhat similar, but it could be tailored to specific lending criteria. So this is the slide I was talking about. I'm finally here. But your FICO and your Vantage. Your FICO score is your is what lenders are going to look at. Okay, that's the big one. So if you're looking at credit, I hate to call out names of apps, but the Credit Karma, because that's just a popular one, I think it's fantastic, but it's not a FICO score, it's a Vantage score. So it's not the same score that the banks are seeing. It's not that much difference, but usually the FICO scores tend to be a little lower than a Vantage. I can't speak to everyone because sometimes that's not the case. But the factors that are considered in your FICO, you can see payment history, amount owed, type, length, and new credit. So payment history is how well we pay, right? We don't want to fall more than 30 days behind. Amount owed is how much we owe. But you know what? And I want to say this carefully because maybe it's common sense to some. It was not to me though. So when I first started doing this, so I want to put it out there, this is really only amount owed really only impacts like the credit cards. So how much you owe on a student loan or how much you owe on a car loan isn't really going to come into play when it comes to credit score. Okay, so when it says amount owed, that's where I know it says 30%, I'm pointing, but 30% of your score is based on this. That's different than the 30% I was explaining earlier. You still want to use 30% or less of your credit, but you can still see a big bulk of our score is based on how much debt we have. So how much credit card debt we have. I'll just put that out there. So you can see the two biggest pieces here, 65% are how well we pay and how much we owe, right? when it says, and I'll continue to elaborate, I promise. The types, the little yellow section is like the two main types of credit are installment, which is, it is what it sounds like. It's a car loan, it's a mortgage, it's a student loan, or a personal loan. That's where your payment is the same for every month for 3 years, and once you pay it off, it's done. Revolving is credit card debt. The payment changes all the time because it depends on your balance. So that 10% of that type, if you have different types of credit, not more debt, we don't want to get into a lot of debt over this because there is a fine line. Again, that might be its own psychological workshop there. But when it comes to this, if I had a car loan and a credit card and I'm maintaining them both, my score might tend to be a little bit more, especially if I, have things that were paid off in the past. Do you know what I mean? So that's what type means. Length is how long you've been using credit. So a year and up. Some business lenders, though, if they're looking at a personal credit, they might want to see 3 years and up. They might want to see 2 years and up. It's hard to say. It depends on their criteria. That's why they're all different, right? And I don't want to speak for them because it might not be that long. But again, we want to just be aware of that. And the new credit, that little 10%, is the inquiries. So remember, pulling your own credit report will not hurt your credit score. Okay. I know that maybe we've heard it on the commercials and things like that, but I'm going to say it out loud again because I want to make sure we know that applying for too much credit too fast will. We don't want to deter people from applying for credit when needed. If they need a car loan or you're looking to get a business loan, that's okay. But if we're trying to go everywhere, when we're trying to move it along really quickly, that's a lot of activity and that can drop our score a bit. Okay. So those are the 5 factors that are incorporated with our credit score. You can see on the FICO, it doesn't indicate available credit as it does on the Vantage, but it is still part of that amount owed. It's all figured within that 30%, right? So if we're following these rules, we're looking at that report, we're aware of the spending, which is going to be in our next workshop because that's a whole other topic. That's good to know. And then I just want to review Vantage really quick because I do see some questions in the chat, or I see the chat box moving along because I don't know if it's questions, but
Yeah, you got a couple of questions.
okay, let me just do this Vantage really quick. So Vantage is just another company that does our credit scoring model. These are what I don't want to say every app, okay, but from my experience, the different apps that are out there, they're looking at our Vantage. And if you look at it, it says, you see payment history, utilization. It's the same meanings as what's in the FICO score, but the percentages are different. Do you see how that works? And there's different versions of the Vantage score too. So the percentages are different. They might rely a little bit more on, length. You can see available credit is a separate topic. Utilization, it means amounts owed. Utilization just means how much am I using of that available credit. So the percentages are different. There's a little bit of a difference there when they're looking at, criterias or topics, but that's just something to consider. So that's why the scores are different. And you know what? It's never going to be the same. There's different versions of our FICO score. So, if you're applying for a car loan versus a mortgage, you might get 2 different scores depending on whatever system the lending institution is looking at. Are they going to be a huge variance? Probably not. But there is no one score that we're tied to for the rest of our being. It changes. It's an ever-changing thing. I just like to simply make the point that there's 2 separate scoring models, so that when we're going into it, we're familiar. Questions? I see some.
Okay, so let's see. What is the best way to get rid of a credit card that is rarely used?
I don't know. Let's think. So getting rid of a credit card. Well, first of all, we have to determine why would we want to get rid of it? Because if it's something that we're not using very often, when we start to close down accounts, that might make our score go down, by the way. Not that I want to deter anybody. If they are overspending on it and you're like, I'm done. Okay, yes, maybe it's a good idea to close it out, but let's see how it's going to impact the whole thing.
Yeah, because then your available credit has decreased.
Correct.
So
Yeah,
if you're not using it, you still have that credit line there that's giving you a higher score.
Right. So especially if you're planning on applying for credit within the next 12 months, of any, even if you're looking to get a business loan, they're going to have to jump to our personal credit, right? I would just leave it alone. I would just not do anything. And then if you really want to close it, wait until that transaction is complete. I mean, if you want to close it, sometimes they inactivate them if they haven't been used for a long enough time. We're supposed to get some kind of written notification about that, but that can happen. I've had credit cards inactive and they didn't really do much to my report, honestly. I think it just depends on your whole profile. But if you've had it for a long time, you're going to see more of a hit than you would have if you've had it for like a year, because remember, length is part of this. So I hope I answered that. All right. And that was.
Yeah, no, I think that's, okay. So how does type affect the score?
Type. So it's basically 10 to 15% based on your credit score. And that means whether it's installments or revolving. So it really depends on, the whole profile, but I would say, just if we only had credit card debt, your score might not be as good as if you had like a car loan or something like that. But that doesn't mean we're not going to get approved for a loan. That doesn't mean it's going to make a huge difference. So if we're not, unless someone specifically says, hey, I need you to have some kind of an installment on here, that's when I would approach it. Otherwise I would just try to keep it consistent, keep my balance, keep my balances balanced and my spending under control, and get what's needed. Again, it's a hard question to answer because it's so unique to the person's profile, but that's kind of the best answer I can give.
So, okay, two more questions, and then we're gonna have to move on. Basically what entities are behind creating the FICO and Vantage score? Like, who are these mysterious people?
They're companies. So it's a true company. They're each their own companies. And there's more out there, which I'm not familiar with. I don't know their strategies or whatnot, but I think there's more organizations that do this type of thing. But that's who it is. They're businesses, just like your business, that creates these models. So I'm sure that there are, I want to use a simple word like mathematicians, all kinds of algorithms that are behind it and systems and things like that. But FICO and Vantage are both companies that utilize these systems and work with lending institutions.
Okay. Last question. I always believe that too much credit available was not good because you can utilize it to create more debt. Is this misinformation?
No, you know what? I'm going to tell you what, you're not wrong. It used to be like that prior to them updating the scores, probably within the past 15 years, more of the criteria, well, like 2007, 2008, I think is when it started to turn more. That used to be a factor, right? If you had too much available credit, they wouldn't want to approve you because they would think that today you're good, but tomorrow you might not be. So that was part of it. But yeah, it has changed a bit, over the past, we'll say 15 to 20 years, as far as what the system goes. Now, the more available credit you have, the higher your credit score is. Maybe we're just more trusted now. I don't know. Do you want me to keep going, Jen?
Yep, keep going.
All right, I'll try to get through the rest quick. So if there's other questions, we can answer them. So I'm going to go through these slides quick because I talked about it, but these are things that make our score go lower. Not enough history, too much unsecured, that's credit card debt, right? Maxed out credit limits, too many applications for credit, late payments, collections, judgments, bankruptcies, repossessions. I didn't talk about that, but that will make our score go down. We have a workshop on that. Charge-offs, poor mix of credit. This is the stuff that makes it good. I'm just going to keep moving along. This is the 30% thing. Make sure we're paid on time. Keep the credit card balances individually less than 30% of their limit. I want to just make a quick note because I know I mentioned this, but I want to make sure I clarify that when it comes to our credit card debt, keeping the balances low is good, right? And making sure the payments paid on time are good. And then when it comes to other loans, if I have a lot of student loans or a lot of car loans, that's not going to impact my credit score. But if I have big payments, my credit score might still be great, but I may not always get approved for that loan because it's that much more money being paid out. That's that capacity thing. So I just wanted to kind of put that out there. It's not necessarily a credit score thing. It's more of an affordability thing. So the 30% really pertains to, it really pertains to revolving credit. Keep them open, only apply when needed. And then this stuff, I think you guys covered a lot of it in the beginning. Ensure a company is seen as a separate business entity. Not that I can speak directly as to how and what, I just know it needs to be separate. The types, I'm not sure of, but I think that, again, that will probably be covered in future workshops, right? Talked a little bit about this. I hope that's the right site. Now I better let's just move past that one. I'll double check with the one that was the IRS site, but building a relationship with your bank is always a great idea. Having, even though they're going to look at personal credit for borrowing purposes, you can open up a business bank account, right? And that can help you to establish those relationships, maintain those accounts, set it up as separately, things like phone number, website, things like that. And doing research to make sure they're appropriate, opening up the cards, in the future, manage them responsibly once we do have those. Even vendor and supplier relationships can help us build the credit, as it doesn't in our personal life. I mean, it might in some regards if we're borrowing for it, but when you're a business, those kind of things can also help you. Improving it, check your business credit report. I think they put the link in for that. I know that even Experian and Equifax, I know that there are business versions of your credit report that you can locate there as well. But again, let's elaborate on that, okay, for the future. But those are just things we want to kind of start to plant the seeds for. Make sure we're paying everyone on time. Make sure that they're reporting it. When we do start to borrow for business purposes, it's not always reported as ours are personally. So ask that question, understand that. Continue to educate yourself as you are doing today. We have your websites in here, the Insight Center, and different resources that you're probably aware of, but this is a good thing. Educating yourself, it's also networking in some regard. And then if people do need to get in touch with us, we are located at 1050 University Avenue, Monday through Thursday. Some people will come to us if they're feeling overwhelmed, but you don't necessarily have to be overwhelmed with your finances if you're looking for support or guidance. So we're Monday through Thursday from 8 to 8, Fridays 8 to 5. Remember, this is more about the personal side of things when it comes to business management, our finances. We're not going to give you business advice, but we are trained when we're offering counseling to kind of understand things that self-employed individuals may need to be aware of. Sessions are booked for an hour, and then it's free to talk with someone. It's individualized. Everything we discuss is confidential. It's also comforting and motivating. We offer budget and credit counseling. We do have programs to help people consolidate debt called the Debt Management Program. If someone really needs that support in consolidating, reducing interest rates, if they're behind or getting late fees or over limit fees, that is please, if you're receiving any fees like that and you're getting a little overwhelmed, call us, contact us, because it doesn't have to be that way. We also offer first-time home buyer education, as well as foreclosure prevention counseling if we're facing any issues with mortgages or getting current on those. And then I know I saw Mina on the line. I don't know if she's still there, but we're very proud that one of our biggest programs is called, or our newest program, Financial Empowerment Counseling. And our counselors are also trained for more of an ongoing type of counseling when it comes to managing finances. I know we're meeting a lot of business owners through this style counseling as well. It's a free service, but this is, it's not just about debt and credit. That's always covered, but it might be about savings, banking, debt, issues with that. So if you reach out to us anytime, there's our phone number, all that good stuff. You can follow us, Facebook, all that fun stuff. Somebody will, ask you some questions as to what you're looking for and get you scheduled in the right department if needed. So again, if you need that support, the financial counseling is always a great complement to everything else that we're doing. So with that being said, it's 10:59. Oh man, we're right to the minute. I hope I answered most of your questions appropriately. I will put my email in here. So if you do have questions, we'll be on the call. What is it?
The first Wednesday of October. So again, this is the first of a series of 3. So we're going to be discussing this topic again in October and November. So please, if you're interested, be sure to register for those events as well. And I will put in the event calendar link for everyone so they can register. And okay, and let's see, we got a question here. Are there any loan houses that have a fiduciary duty to their customers the way financial analysts do?
I don't know. I don't know if anybody else wants to take a stab at that question. I'm really not sure. I wish I could answer it, but I don't know.
Yeah, you're going to be receiving the slides, so as well as a link to the YouTube channel. So if you want to watch this again, you can do that.
Regarding the fiduciary loan houses, all of them have to be licensed, all of them have to comply with truth in lending laws. They all have the, Fair Credit Reporting Acts that they have to, so there's a lot of regulatory compliance around anyone that decides they want to provide a loan. The thing you have to watch for is interest rates. I've known auto dealerships that have charged 29.5% for a 2001 Honda Civic, so understanding how interest impacts it, but shopping around. I mean, your credit unions are great resources. We've got really good banking in Rochester. There's Kiva, there's lots of resources there. And if you have questions, you can always talk to the Financial Empowerment Center. You can get in touch with CCCR Rochester. So there's resources, people. All you got to do is reach out to them and get the answers that you need.
Your DUNS score is do you mean your DUNS number? DUNS doesn't, let's see. That's a good question. I don't know. Gina, do you know if you
They do. It's not a score like a FICO score, but with a DUNS number, they will report how you're paying vendors. And how your transactions look as a company. I haven't seen exactly how they report it.
Well,
but
I've received free, they've sent things to me, well, like the library, they've just directly send it without it being requested. So that's a possibility. But yeah. Yeah, I can, if you want to email me directly, I can show you like what that looks like when we search in our databases. It's going to give you a score on do you pay within 30 days? Do you pay within 90 days? Things like that. So if you want, I can show you an example of that. Okay, last call for questions. I want to thank you guys for being so attentive and asking such phenomenal questions.
Yeah.
Really engaged. So really great. And so I hope you all join us again in October and November for parts 2 and 3, because obviously this is a complicated issue and, lots to learn on this front. So I want to thank Andrea again, and, hopefully we'll see you all in October.
Awesome.
Great.
Thank you
Thank
so
you.
much. Thank you for letting us speak, and good luck to everyone. We'll see you next month.
Yeah.